One. Boom. All right, ladies and gentlemen, we're back after a turkey week, and I want you guys to join us as we explore our guest journey today, his insights and innovation solutions he's developed to create a greener and more sustainable future for all of us. So let's get started. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life: prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone, because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros.
All right, ladies and gentlemen, today we're privileged to have a distinguished guest who's been at the forefront of sustainable finance and climate change research. The CEO and CIO of Carbon Cap Management LLP joins us to discuss the critical issues of carbon emissions and environmental investment solutions. Throughout our conversation, we'll delve into his extensive experience in investing management, his dedication to addressing climate change, and the innovative strategies he's developed to cap and reduce carbon dioxide emissions. So let's welcome to the show, Mr. Michael Azlen. All right, Michael, welcome to the program.
Pleased to be here. Thank you very much for having me today.
All right, man, let's do this. Everybody who comes on the show is here to promote something. There's something that they're doing, a message that they want to get out into the public, a product or service that they know everybody needs. What is that for you?
Really, it's education around both climate change and what are the solutions that can be used to impact, to cap and reduce emissions in an economically viable way.
There's always two sides to every coin. There's people who don't believe environmental issues are a thing. There are people who believe it is a thing and they have no control over it. And then there's people who feel like, look, if we just take this bull by the horn, we can take things into our own hands and do things the right way. Who's your target audience? Who are you speaking to when it comes to what you offer as a product or service?
Yeah, I think I'm speaking to really everyone, but especially young people. I mean, you mentioned you have some young people there today. Young people today have one asset that no other generation has ever had: time. They have the longest longevity and time. And when you look at where we're at with regard to carbon emissions, the concentration in the atmosphere, and the impact of that, it is the young people who are going to suffer the impacts at the biggest level. So for them, it's probably the most important issue.
We've been hearing about environmental impact for a long time. I mean, as far as I can remember, we've been talking about it. Moves have been made, whether they're on the political stand front or just from businesses trying to become more they're more green for their own bottom lines at the end of the day. Sometimes it's for social issues. Let me know a little bit about your background. What drove you to this type of work? I feel there's always some sort of calling when it comes to people who are working in the environmental space. Was that your kind of journey as well?
Yeah, so I've been in the investment management business. I'm Canadian. I'm based in London. I did my graduate degree at London Business School, and I've been teaching on the graduate degree program at London Business School. It's kind of the Harvard of Europe in terms of business schools. I've been teaching there now for 18 years, and I teach a segment on impact and where we're at with climate change and carbon markets. My journey was a little bit funny. I built and sold my previous business. I sold that company to a Swiss public company. And after my earnout period, I had time. I was in a very fortunate position. I did not have to work. And I began to research all kinds of different areas that had always interested me. My wife said, "Get out of the house. You're driving me nuts." So I rented some office space and I started researching, looked into climate change. I was quite skeptical about climate change. I had two areas of skepticism. One was, how bad is it really? Because, when you look outside every day to day, it doesn't seem that bad. And the second issue I had was, I knew that the planet's climate had always changed before human beings were on the planet, because of course humans have only been on the planet roughly 250,000 years, and we've got very good records on climate going back millions of years. So these were my two areas of skepticism, and I just started reading the research. Now, academic research goes through a process called peer review. So if you try to publish something that's not true, they jump all over you, and it's very difficult. And that's why published academic research is a great crucible to bring out the truth. It brings out the truth in any topic that you're interested in. I believe it's a really good go-to place. So I started reading those research papers with a skeptical attitude. As I went through month after month and more of the research, the actual weight of the evidence was overwhelming. I'm a very empirical guy. I make decisions based on evidence, not on anything else. That's how I decide. And after 2 or 3 months of going through that information, I really realized we're in a serious, serious problem with climate change, much worse than most people, even people working in the environmental movement, realize, for a number of reasons I'd be very happy to talk about. And that was the penny drop moment for me. I've got 3 children myself. I said, hey, I should do something in this space. And this was about 1 year before the whole Greta Thunberg, thing came out. So I got deeply involved. I then enrolled at the London School of Economics, another very famous institution here in London, England, where I live. And in that program, that is where I learned about carbon markets. And as some of you may know, Europe launched a carbon market in 2005. And from 2005 to today, emissions in Europe are down 1 billion tons per year. The annual run rate. The state of California has launched a carbon market. The state of Washington has launched a carbon market. And on the East Coast of the United States, 11 states together are also in one carbon market. So this market-based solution to cap and lower carbon emissions is now spreading globally, and that's a very good thing. So that was my brief journey and background of how I got committed to this.
Let me ask you about the entrepreneurial side of it, because on the one hand, there's always the overwhelming evidence that kind of pushes you on a social aspect to make a change in what you're doing or how you're doing it because of the global impact that it's having. For smaller businesses, probably not as big deal. When you get to some of the bigger manufacturers, all of a sudden it can have a huge impact on the way you do certain things, on your overall emissions. And I'm curious, as an entrepreneur, when you go to kind of pitch this to different companies out there to kind of educate themselves to make a change, how much of it is weighted on the social issue, and how much of it do they take into consideration when it actually weighs on their bottom line for them to implement some of these changes?
So just to complete the story so you understand our business, when I understood these carbon markets, my first question as an investment professional, because carbon was trading about $500 million every day as a traded asset, a liquid asset that trades. So I wanted to look at the historical statistical properties of carbon as an investment. I thought, hey, this might be a good investment to invest in these carbon markets. When I looked for research, there was none. So I hired a PhD student from the London School of Economics. We collected the data and we analyzed the data, and we had our own research paper. It took 3 years, but the paper was published in the Journal of Alternative Investments. Now that research on carbon as an investable asset, I presented that research at a conference in Spain, and the CEO of a Swiss private bank approached me when I finished. He said, I love this carbon idea of investing in carbon with an impact. Would you like a backer? We entered into negotiations. The Swiss bank took a 10% stake. I launched my second investment management business. We built a world-class team, and we launched a very unique fund. It's called the World Carbon Fund. The fund invests in carbon markets around the world. The fund is now the biggest fund globally in carbon markets. We just passed $300 million in the fund. And the fund launched almost 4 years ago. And over that period, I'm pleased to tell you, the total return in the fund is over 100% net to our investors. So it's been a very successful fund launch. And the impact piece, here's the impact piece and the answer to your question. We take 20% of our performance fees that are generated from the fund as the manager, and we commit that to buy carbon permits, and we permanently cancel those permits to have a direct impact on climate change. And we've been doing that for the past 3 years. Now, so this fund is an impact fund. To answer your question, we have 85 investors in the fund. We have 7 big institutions who have invested in the fund. Only one big institution is concerned about the impact. Maybe 3 or 4 out of 85 investors are really focused on the impact. The rest, it just doesn't matter. They want, what's the return? What's the risk? What's the correlation? What's the liquidity? The kind of normal fund management question. So that's, but I'm thinking as we move forward, there will be a greater proportion of investors who will, in fact, be motivated to invest because of the impact piece.
How do you turn an emissions process, a way of of people kind of their normal everyday operations, they're emitting some sort of carbon? How does that become a liquid asset that you then trade? Kind of walk me through that process.
So there's a lot of really good information on this on our website, but I'm going to give you a very, very quick overview of how a carbon market works. Here's how it works. First, what is the goal of the carbon market? 2 goals: cap emissions and lower them, and do this at the lowest cost to society. Very important, the second point. How does it work? In California, let's use the state of California, where they have a carbon market that I think launched in 2012. In the California market, every big emitter, every factory that emits more than 25,000 tons or more, the big guys, the big emitters, not people, not small business, only the big emitters, they are notified by the state of California, and you're in the program. Mandatory, no decision. You're then audited every year on your emissions. So if your factory emitted 2 million tons of carbon last year, this year you must give the government 2 million permits. Where do you get the permits? In California, they sell the permits. The government sells the permits at auctions. They have 4 auctions per year in California where they sell the permits. Also, the permits trade on the secondary market, kind of like the stock market. So you can also buy permits in the secondary market. So every year in California, let me give you an example of an annual cycle. So let's say the emissions are about 300 million tons, which is what the emissions are in California. So the government sells 300 million permits. Companies buy them. They know they need them. If they don't hand the permits in, there's huge penalties. So they all comply. We have 99% compliance. There's no cheating. At the end of the year, all the companies are audited. And if the total emissions of, let's say, 5,000 big companies in California, the total emissions are 300 million, they give the permits back to the government. The government says, good job, guys, you complied. And that year is complete. Now, the government has all the permits. They destroy them. The next year, instead of 300 million, the government sells 290, destroys them. The next year, 280, 270, 260, 250. So we're playing musical chairs. There's less permits to emit carbon every year, which means someone in that ecosystem, some company, must cut their emissions. So the first thing I like about a carbon market, it caps and lowers the emissions. Now the question is, which company will choose to cut their emissions, right? Now, if my internal cost in my company is $100 a ton to cut my emissions, is really expensive, and the permit price in California is 38 bucks. So if I emit 1 million tons, it's costing me $38 million a year. So I call my head of engineering in and I say, hey, John, we need to get our emissions down. I'm sick of paying the state $38 million in our company every year. Can you reduce our emissions? And John does all the numbers, and he comes back and says, yes, I found some new machinery. It's going to cost us $80 million to bring in the new machinery, but when we amortize the cost, it's going to work out to be $20 a ton. So now I'm the CEO of the company. What do? Do I buy the permit for $38, or do I cut my emissions internally? It costs me $20. Easy decision. I cut. Right? I cut my emissions. But there's another company in California, and that company, the head of engineering says it's $100 a ton to cut. So what does he do? He doesn't spend $100. He buys the permit and gives it to the government. So every year, basically, when we lower the number of permits, we can be quite confident the companies with the lowest cost of cutting their emissions, they're the ones who cut because they make more money. So the concept of the carbon market, it works on the profit motive. And we all know the profit motive, supply, demand, and price. This influences behavior, not green, not good deeds, supply, demand, and price. And that's why the carbon market works. So that's a very quick, it took me about 2 weeks to really understand this mechanism, but it's pretty smart. It's a pretty smart mechanism. Now China has launched a carbon market, South Korea, Mexico, Indonesia, Philippines, Malaysia, Thailand, Brazil just passed legislation to launch a carbon market, India, and now Japan. So this whole cap and trade concept to address climate change is really spreading now, and that's good news.
So let me ask about pushback that you probably get. Ultimately, you can only cut emissions so far as regulation cuts them down the number of permits every single month. So I would imagine investors are worried about what's that low point, when do we hit our plateau? And then on the flip side of that, what happens when a new company comes on board? Does that increase the number of permits that come on the market? And I guess the third side of that is, if I'm doing really, really well, can I just buy more permits and kind of skirt it around and kind of leave the cutting costs to the other, that obligation to other companies?
So the first thing is, let's start with your last point, because that's kind of the most important. Because the total supply of these permits, each permit allows you to emit 1 ton of carbon in the atmosphere. And that total supply is 300 million. So you can't have, those companies can't emit 325 million because there's only 300 million permits. Now, one company could emit 2 million more, but someone in that system has to cut because there's only 300. So every year we lower the supply of permits. So we know emissions are going south. Right? Now, one company emits more, one company emits less, but that's the beauty of the market. The market finds, and we let a free market solution decide. Each company decides, do I want to cut my emissions or just buy the permit? And of course, they make that decision based on profit. When a new company comes in or leaves, so that threshold of 25,000 tons a year, if a new company is getting bigger and bigger, and all of a sudden they come in, then they enter the market and they will make an adjustment to the auction supply. All of these kind of fine-tuning mechanisms have been worked out over the last 20 years, and now it really works well. And as I said, the proof is really in the pudding. In the state of California, we've had a big drop in emissions through this mechanism, and in the EU. Now the UK, where I live in London, England, UK launched their own carbon market, of course, after Brexit. So it's just a mechanism that works. In the EU and in California, what they do is that cap, at 300 million, then 290, 280, 270, 260, it keeps going down. Normally, that is aligned to the legislation that is passed in that country or state, like in the state of California, where they've legislated a trajectory to get to net zero by 2050. So they normally cut the supply of permits so that you stay on that glide path to achieve that long-term environmental objective.
At the end of the day, that net zero still is kind of elusive, because there's always going to be something. you create something, something else gets kind of destroyed. It's kind of a balancing effect, the yin and the yang, maybe the dark side and the light side of the force. I feel there's always kind of that both sides of that equation. But to get to that net zero, I think that's a great goal to have. Do you think it's actually attainable?
So the big new exciting development here, when we talk about net zero, right? The key word is net. And that means that you could have part of the economy still emitting 10 million tons a year and another part of the economy that removes 10 million tons a year. Now I'm at net zero. I emitted here, I removed here, I'm at net. And of course, carbon dioxide removal, there's now an explosion of growth of new companies. And for anyone young, I think the carbon removal industry is likely to be probably the biggest industry in the next 2 to 3 decades. The IPCC, the Intergovernmental Panel on Climate Change, have already calculated that we need to be removing 6 billion tons of carbon per year by 2050, and some estimates say we need to be removing 2 billion by 2030. So that whole industry of removal is exploding, and it's exactly to answer your question. There's no way we're going to get the emissions to zero. We'll still be emitting over here. We have to have another means of removing the carbon on this side of the balance sheet so that we net off and we can get to zero.
Yeah, and that makes a big difference. Again, it's the vocabulary, it's the understanding of how that whole system works. I think you've laid it out pretty eloquently here. I mean, it's simple enough for me to understand, and I have no idea. I've never been in the carbon space or know how it works, but now to have a good idea of how that net zero balances out, what the actual goal and objective is, how you're even monetizing this structure. So tell me, what is it that you guys do best at carboncap.com? What is it that people look out for? And, part of it is obviously the education. You've made it simple to understand, but the other part of it is,
we are an investment management company. We run the largest carbon fund in the world. We have a whole group of investors in the fund, and the fund performs. The fund is up 11.5% this year. The fund was up 50% in 2021, 9.5% last year. So as I said, since we launched, the fund is up more than 100%. So it's an uncorrelated alternative investment fund that is a nice place for potentially sophisticated investors. And I would stress that the fund is for sophisticated investors to allocate some capital. The second objective is impact. We at Carbon Cap want to create a real impact. So we take 20%, and this is of gross revenue of our performance fees, and we use that to buy those permits that we talked about. And what do we do when we buy the permits with our money? We cancel those permits. We permanently take out those permits out of the system, which means those tons of CO2 can never be emitted to the atmosphere. And the best ton of carbon is the ton that's never emitted, right? So we align our interest as the manager, we align with the investor for performance and climate impact. And the fund holds Article 9 in the European taxonomy, which is the highest level of impact under that regulatory regime. So we run an impact fund. It's liquid. We're running more than 300 million in the fund today with strong returns. So that's our offering. Our offering is to sophisticated institutional investors and family offices. This is potentially a nice product to diversify your investment portfolio and have some climate impact.
So sophisticated investors, this is not the average run-of-the-mill individual, and it's not quite the accredited investor. Can you kind of define that for people who are interested in kind of being a part of it?
Yeah, so our fund has it is for accredited, sophisticated investors. Probably the smallest investment size is $250,000 US. That would be the smallest, and probably the average investment size is somewhere between 3 million to 10 million. And now, because we're approaching our 4 years and we've just reached 300 million, we began this year at 125 million. So we've gone in 10 months from 125 million in the fund all the way to 300 million. So quite strong growth, and our pipeline now is much more institutional. So perhaps investors who could invest, 5 million or 10 million in one go. So I think we're planning to continue to grow. Hopefully, we'll be 500 million by the end of next year, and at that point, we're going to look at possibly soft closing the fund.
Awesome. You guys are making some amazing headway. The fund seems to be growing nicely. You're literally kind of playing into what you wanted to do in the first place by canceling out those permits and making a difference within the organization. Any final thoughts before we head out? If people want to reach out, they want to find out more about maybe getting involved, even if it's not on the investment side, how can they do that?
Yeah, I always stress to people, there are so many good resources. Educate yourself. Don't let social media and other people inform you. Do the work yourself. Read the research. Do the work and then generate your own opinion. That's my advice, especially to young people today. And I would recommend Johan Rockstrom's book called Breaking Boundaries. I've read 34 different books on climate change. This one is a very easy read, and it's right up to date on all the latest science of what's happening with climate change. And especially for young people, Breaking Boundaries, read the book, do your research, and then hopefully get involved.
All right, Michael, thank you very much for coming on the program today. Ladies and gentlemen, look, environmental issues are a thing. And if you're going to get into business, sometimes dealing with the environmental side is part of what you're doing, especially in the manufacturing space. And you're going to want to make sure that you understand that process and how it works. And I think Michael and his team are doing exactly that, giving you the education you need, even though for most of you, it's probably not going to be the investment you're looking into. It's the knowledge that you need to understand how it works, because ultimately at the end of the day, your business might be partaking whether you want to or not, especially if you're here in California. So Michael, thank you very much for being on the program today. Ladies and gentlemen, website is carbon-cap.com, carboncap.com. We'll see you guys on the next one. And that's all we got for you guys today. Peace. And we're out.
It's over. Go home. Is your business in need of marketing? Try starting a podcast. But not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www